FII priority Miami 2026 conference that took place, and Brad Garlinghouse was speaking here. So let's tap in and listen to what these individuals have to say. We'll pause it if anything juicy comes up. I'm gonna put it on 1.25 though, so we can get through it.
Here, Brad, I want to start with you. Ripple launched RLUSD just 13 months ago after years of focusing on XRP. What changed, and what were your institutional clients asking for that made launching your own stablecoin essential to your business?
Well, the part of that story that's kind of unknown is 2 years ago, so more than, I mean, it was right around 13 months ago we launched. 2 years ago, we were minting 20% of all USDC. So we obviously, it's Ripple's core business around payments, cross-border payments. We were driving, we've done over $100 billion of payment flows. And we found if we're the #1 minter on the network, why don't we look at actually doing this ourselves? That also was around the same time that USDC depegged from the dollar because of the Silicon Valley Bank demise. And Circle came out and said, hey, we'll stand in the gap. We'll guarantee the peg. And it didn't move because at that point, Circle didn't have a balance sheet. Ripple has on our balance sheet, $60, $70 billion of crypto. We have about $4 billion of US dollars. And so I think we're in a position to really have a very compliant, very institutional focused stablecoin.
Interesting. Maya, you've been in payments since the early 2000s, very early adopter here. You've kind of seen what does, what doesn't work. What specific pain points or failures in traditional systems convinced you that stablecoins are the answer?
Yeah. So I've been in traditional payments since 2007 in Africa and Latin America. And in 2010, I went into Bitcoin. And I think I had a real experience of kind of paying while I was living in Africa, receiving paychecks, seeing entrepreneurs trying to access capital for their startups, right? When transferring money takes about 15% of your paycheck, you start to question when you can't get funded as a startup in emerging markets and an office in New York or London or Paris pulls out capital because those markets seem risky, right? This is where you start to question the whole system. And I think for me, early days living in these markets, this is why I recognized that much faster than my peers in the US is I said, we need something different. And for me, there was a clear solution years later that stablecoins are going to be that solution, right? It is programmable money. It was very simple. So there are real pain points that these types of programmable contracts actually do solve.
Interesting. Zach, you are building a stablecoin through World Liberty Financial, but that's not all you're doing. You're essentially creating a new financial stack for folks who don't know. Why didn't you just want to improve the existing system?
How much time do you have? Well, I mean, I guess let's just start with sort of the nexus of the business. I started the business with Donald Trump Jr., Eric Trump, and Barron Trump. They had been debanked. I believe they were given 14 business days to find a new home for several $1 billion. And so we began to think and strategize around, a more democratized system where, no one was going to tell you that you couldn't hold US dollars because of your political beliefs or, personal beliefs. And that system ultimately revolved around a stablecoin. We're doing a bunch of other interesting things and, decentralized borrow and lend markets, tokenizing real estate as well, building a full ecosystem around it. But when you look at the system today, right, it can cost, up to 8% to send money across borders. I think stablecoins will compress that to almost zero. The real friction in FX today is when you send money across borders, it can take 3 to 5 days for that money to arrive, and there's real currency hedging risk in those 3 to 5 days. Stablecoin solves for that with immediate settlement, right? Thereby eliminating all of that hedging risk. And then if we start to look at the future, in a world where machine-to-machine payments become most likely prevalent, right? I think there's an argument to be had there, but these machines aren't going to be able to pay each other on traditional banking rails. They're too slow. They can't KYC, right? But really, they're too slow. These payments need to happen instantly. They need to happen globally across borders. And stablecoins, they're really just programmable dollars. Dollars 2.0 is what I call them.
Yeah, and I mean, you're really working on essentially a parallel economy, Zach.
Yeah, I would say that's probably accurate. I mean, we say at World Liberty in 3 to 5 years, maybe less than that, hopefully less than that, people will just refer to this as finance, right? Today there's DeFi and there's TradFi and all of these different terms, but this is really just an upgrade to the traditional financial system.
Just FI,
Exactly.
I think we created something new here. We talk a lot about big ideas here, but I also want to get sort of practical.
Yeah, hold on. I got to pause that real quick because he just said these agentic AI agents are not going to pay each other over traditional financial rails, right? They're going to use blockchain and crypto. And then him saying that on stage just real quick, reminds me of some of the stuff that happened this week. Yo, Aqua, I know you saw this, bro, but I don't know if Kev saw this. Let me find it on my freaking profile. We had Melania Trump walking in the White House this week with freaking the AI robot or the humanoid robot.
Yeah, I seen that.
You saw this, bro?
Yeah, that was wild.
Why? For anybody that didn't see this, peep this real quick.
Mad nonchalant.
Bro, I was just thinking, what if they're low key, both of them are robots, so that's like a robot version of the first lady. Just saying, bro. Just saying, because they got these humanoid robots that have skin on them and everything. So, what hidden in plain sight, giving it to us right on a silver platter, and we're over here looking at this as there's contrast. It's just one robot has skin, the other one does not.
No, 110%. We got to excuse Kev and Aqua because it's Friday. They got their kids in the background. So if you guys hear them, mind you, family men, right? Dude, I agree with you 100%. The reason why I stopped that talk track, because the dude said that, AI agents aren't going to use traditional financial rails to pay each other. That reminds me of something that Jeremy Allaire said this past week. I had posted this clip. Listen to what Jeremy Allaire says in this one, bro. This one's wild too.
We can't hear it, bro.
You can't hear this video of Jeremy Allaire right now?
No.
No, can't hear
All
that.
right, hold up. Let's see.
And but at the same time, and this is the message that I give to every single employee in my company, is that if you actually embrace these agentic capabilities, you as a person have new superpowers, and your ability to have impact grows dramatically. And so it's simultaneously going to, I think, eliminate roles that humans need to perform, but at the same time, it's going to empower humans in incredible and unprecedented ways. And that's a tremendous opportunity for economic output and enhancing economic output and creating exceptional opportunities for people as well. But I think there are going to be this kind of discontinuous relationship between the way in which the job transformation impacts the labor and the way in which humans pick up these tools and use these tools.
Bro, he just said agentic AI. He said so much in that one piece that agentic AI is going to give humans that use it superpowers. And then he said that there's going to be a huge disconnect between the jobs that are replaced that AI replaces, and there isn't going to be a need in certain aspects for humans.
This is just proving that universal income is definitely real, and it's definitely going to have to come. And then at the rate that it's growing at, by the end of this year, it'll be smarter than humans.
Man, and then that feeds back into that one clip that we played of Elon Musk weeks ago at the World Economic Forum, when he was like, yeah, 5 to 10 years, all AI is going to be smarter than humans.
Yeah. Well, I thought he had said it in the next 12 months. That's what he said. And then he had made some other claims after 12 months. But he said in the next 12 months, AI will become become smarter than humans. And then it said it'll surpass in the later years.
The bottom line is that now is that time to build them digital skills, because if you're not building digital skills that are self-sustaining right now, it's like you're headed into a really scary future. Really scary future.
Yeah, bro, 100%. My bad. I was just nodding my head because my daughter is wilding right now. But yeah,
Kev, you're
for
still
sure.
muted. You got to unmute if you want to talk, Kev.
Nah, man, the future's gonna be scary for you if you don't know how to trade, how to do DeFi, how to make internet money. So you best find a way to figure it out, because no one's waiting for anybody anymore.
Not to mention, I keep saying this, like, if you're in crypto, you're in the space, you should learn how to trade. Like, otherwise you're holding, you're in a vehicle that you don't know the rules of the road. You know what I'm saying? Like, you don't even have a driver's license. Like, it's mandatory, anybody who's in the space, to start learning, especially, like, man, all I suggest is start learning now.
Somebody said we got some good comments in the chat. I agree. I'm an engineer, integration engineer, and I'm constantly teaching AI to do my job in certain aspects. I'm finding myself increasing my knowledge that is AI driven, but that won't buy much time. Somebody else asked too, Kev, if you don't mind, or maybe Aqua pulling this up in the chat, if you guys go, Midwest said that looks like a protocol that they're asking about, Intel Fortis. I don't know. I've never heard about it personally, but they asked if we've ever touched on it or taken a look. Maybe if you want to pull
Share
that
a
up and
link.
we can bring it to the stage. Yeah, I don't know, Midwest. If you want to drop a link in the chat, that'd be cool. If we could pull it up, that'd be great. But yeah, we'll bring it up later on in the conversation, because we're definitely going to get into DeFi. I think Aqua shared a post from Senator Loomis that she just mentioned that was like low key kind of bullish for DeFi. But I want to finish playing this real quick because I haven't heard it. I've seen some videos circulating on it, and we're 5 minutes in. We got about 10 minutes left, and I'm on 1.25 speed, so we'll get through it. But this is Brad Garlinghouse at the FI Priority Miami conference that took place just a couple of days ago. So let's tap in and just see if there's any other juice. But that comment that the gentleman just said about AI agents not using traditional financial rails, and instead they're going to use blockchain rails, is, you know, super, super interesting, again, to just highlight what's happening and the perspectives from these, you know, larger entities.
Because I think we're seeing MasterCard, Visa, JP Morgan, all of these huge institutions embrace stablecoin. And I'm sure there's a lot of folks listening in kind of trying to figure out, how should this fit into a portfolio strategy today? So I do want to hear everyone speak to that. And Brad, specifically for you, I mean, the top 5 stablecoins continue to dominate roughly 90% of the market. How competitive is this landscape really? And do you think with the passage of the Genius Act, we can expect the stablecoin space to get more crowded, or are we going to see it consolidate?
I think in the short term, it's going to get more crowded. Look, I will echo something Zach just said, which I really agree with. You know, I first got involved in technology in the late 90s, and everything was an internet company. We don't talk about anything as an internet company now because it's just prevalent in the background. And I think that's where some of the blockchain and crypto-based solutions, I think in some ways the industry holds itself back by leading with, we're a crypto company, because people are like, what the hell is that? You know, like, they just want to solve a payments problem. They want to solve a custody problem, you know, whatever problem it is. It's not necessarily a crypto first. And so I think, you know, in 5-10 years, as Zach's describing, we won't talk about it that way. Yeah. But I do think, you know, as an example to your question, you know, do I think the biggest banks in the world are thinking about, should we launch a stablecoin? Yeah, I know they are. And the question is, does it make sense to have, you know, a proliferation of stablecoins, which really does harken back to the early 1900s in the United States, where you had banknotes before the Federal Reserve, and like, do we need that fragmentation? So I think in the short term, we may see more fragmentation, experimentation. I think that's good. But over the long haul, I think you'll see consolidation, where different stablecoins will specialize in different solutions. You know, at the end of the day, having very compliance forward, you know, Ripple took a path of not just getting a New York Department of Financial Services license, but also an OCC license. You know, I think you're seeing the largest player out there. You know, Tether has now said they're going to get an audit again. You know, we need the industry to lean into that kind of transparency and verification from a regulatory point of view. So everyone wants to get in it right now, but not everyone's going to be a winner. Is that fair? Well, I'm guessing we would probably agree. We don't need, you know, $50 stable coins. Like, why? Like, it's still at the end of the day a US dollar. Now, will you see differentiation around trust and licensing and transparency of deposits and things like that? Sure. Yep. But, you know, I don't know that we need, you know, does Citibank want to accept a JPM coin or B of A coin? Like, okay, it just starts to really, my head starts to hurt when you think about the proliferation. If your head starts to hurt, imagine how I feel. Maya, you've seen a few pitfalls, Libra, notably trying to gain traction. From a regulatory and trust perspective, what are the biggest pitfalls that you think institutions and folks here need to be aware of?
Yeah, I think it's a really loaded question, and I agree with Brad in terms of not having it locally. But I think it becomes a really interesting geopolitical question when you start to cross border. And because today, right, you have Tether that is one of the largest US Treasury owners, right, in the world. And there is a reason we have a Genius Act in this country. And that has been a political reason to also partially export US dollar globally around the world. And so the question for a lot of the audience that's international is, are you comfortable with, the protocols that are programmable built in the US to be really deciding how you need to have your fiscal policy and how you need to have things done in your country. And so I think this is why there is such a demand right now out of a lot of different markets to say, okay, do we have our own stablecoin and what is that actually backed by and how does it work? How does it interoperate? Or is it just one or two winners globally, which is going to be backed by still a US dollar? Because guess what? A lot of emerging markets, when they have a chance to hold a USDT or USDC, that's the first thing they will hold, not their own currency. And so I think that's kind of one thing. The second thing on Libra, I remember when Libra came out, and Libra was a project, if some of you don't know, was that Facebook wanted to launch a stable coin, and it was basically a basket of different currencies. And so they came my way in 2019, and I said to them, this will never work. And they were like, no, we are Facebook. We have 3 billion users. Of course this will work. I said, no, this will never work because you have other currencies in your basket that US government will never support, right? You have to have one currency, which is dollar. And so I think a lot of the things that they front run it, right? They thought that just because they have 3 billion users, they'll go up to the DC and then they'll get a clap and be awarded something, and then they go launch something very powerful. So I think at the same time, when I look at what Stripe is doing and Google is doing, right, I look at all these fintechs and I'm thinking, wow, all these actual fintechs can somehow become banks, right? Can launch their stablecoin, can launch their currency, some aspect, right? And that, I think that's exactly the tension that's happening right now on the Hill, which is like, does the technology win? And I don't think so, right? I think to Brad's point, I think it's going to be the banks who are going to fight for that stablecoin and for that, capital, really, to own the capital and the railways.
Yeah. Zach, one of the things that you're doing that I feel like a lot of people are talking about is tokenizing real world.
What I want to say right now is I wonder if where does the credit union aspect of all these people's perspectives, including Brad's, fit in? Because they don't know what we know, I'm assuming. And it's that right now on the XPR network, there are multiple, credit union stablecoins sitting there idle, not having been activated yet, but there's like over what, Aqua, 20, 25 stablecoins right now?
Yeah, there's 25. But what's funny is her talk track mentioning Stripe and Google. Both of those names were listed amongst another name, big name, Apple, and a few others. I'm trying to find it right now, but John Ungerlin had said it at some point in time, like in the last 4 or 5 months. I'm trying to find the video, but he mentions those same exact names, that they're going to be announcing stuff in the future that will include those names like Stripe and Google. And whenever you hear about Metallicus, it's more than just the credit unions. They're also naming the banks and fintechs. So yeah, that's what I have on that.
Yeah, very interesting. For absolute sure. All right, I'm gonna pull up that protocol that one of the members in the chat is talking about, but we'll come back to that later on when we get into DeFi. We'll swing back to that if we have some time. All right, let's finish this off. We got maybe 4 or 5 minutes left. Let's see what else comes out of this.
Assets. You're tokenizing a hotel in the Maldives. For family offices managing diverse portfolios, what does that look like? Is that something that they should be investing in?
Yeah, I mean, I think it's something they should be quite excited about. I think the two probably most important aspects when we're talking about tokenizing real world assets or RWAs is access and liquidity. So in terms of access, you're opening up the investor pool to a global pool of investors, to much smaller check writers, right? People who can write $20, $50, $100 checks. There's no reason why someone with $20 to invest shouldn't be able to invest in 5-star real estate in or Class A real estate in the Maldives or in Riyadh or anywhere else in the world. And then in terms of liquidity, traditionally assets like real estate are not that liquid, right? There's 5 to 10 year hold periods. Tokenization solves for that, right? You'll be able to sell your equity token in Trump Maldives, or we're calling it Maldives One, during the development phase, or you can sell some of your tokens and keep other tokens. You'll be able to lend against those tokens and collateralize them. And there's just a ton of use cases when you start talking about tokenizing real world assets. And then I'll just add, like since the operation began in Iran, the most traded asset on Hyperliquid is actually tokenized oil. And what you're seeing is actually Wall Street is trading on Hyperliquid like crazy after banking hours, after the market closes, and on the weekend. Because as we all know, the global economy is 24/7, and it doesn't have banking hours. It doesn't have market hours. And, people are looking for ways to, hedge those bets that they have, after market hours, on weekends, et cetera. So I think family offices should definitely be exploring investing and using real world assets.
Fascinating. Brad, I know your favorite subject is what's happening in Washington, D.C. Right now, there's a debate around stablecoins. Are they more of a savings asset, or should they be used as payment? Where do you fall on this debate? What would you like to see in that regulation?
So as you described, the Genius Act passed last summer, which I think was a major step forward. And I think it was one of the unlocks and demand and excitement around stablecoins. And you're seeing CEOs and CFOs at Fortune 2000 companies saying, hey, are we using stablecoins? Could we be using stablecoins? And that's going to continue to happen. The Clarity Act, which is intended to be kind of the fast follow-on, not quite fast, to provide clarity about what is a security, what's a commodity, et cetera, has been slow. And in part is the banks have kind of reopened some parts of the Genius Act about how are yield or rewards happen, what's the difference between reward and yield. Look, Ripple doesn't have a big dog in this fight. And so we have kind of, on this particular point, let people who care more deeply about it fight that fight. I do think that having this White House support the Clarity Act and push it forward has been profound. The fact that the SEC in the United States and the CFTC 9 days ago came together and said, these 16 digital assets are commodities. You think about the contrast between that and the Biden war on crypto that drove it offshore in the United States. So I think we already have made huge progress in this administration to provide some of that structure and clarity. I think clarity will still pass.
I would like to correct Brad Garlinghouse. Not only did they say these 16 assets are commodities, they specifically said these 16 assets are examples of what would fall into the category of a digital commodity, for the record, which means that the likeness of these assets compared to other assets would also fall into the category of digital commodities. A lot of these, like Solana, XRP, Maxis, HBAR, they just constantly say that the SEC greenlighted just these 16 assets. That's actually not true. If you actually read the release, it just says that these are the example of what would fall into the category of digital commodities. So it's just weird the way that Brad Garlinghouse worded that right there. But just to make things clear, I'll continue to play this.
I was in Washington 2 days ago, and I think we'll still get something. I think the person that I trust and how the sausage is made on these things said, when people are their most exhausted, most annoyed, that's when they finally compromise. And I think we're there. People are annoyed, they're exhausted. So hopefully we get something done. I'll predict by the end of May, we'll get something across.
That is a great line. Maya, you called stablecoins a tool of economic statecraft. How are you seeing it shift power dynamics globally here? And I know we're tight on time, so I'm going to ask you to be as pithy as possible.
Yeah, didn't think you're going to call on me on that one. But yeah, they are a tool of, economic warcraft. As I've said earlier, there is a tension. A lot of ministers I speak to around the world, particularly in emerging markets, the question is not just on digital assets, but it's on AI, right? I wrote a piece called AI Dollar 6 months ago that basically says, OpenAI is doing diplomacy for the US government around the world because, governments are using OpenAI. And that's really, a lot of governments, unlike Saudi, for example, Saudi has taken a different position to build their own and really push on AI tremendously. But a lot of other countries are just allowing, right, for basically when you use somebody else's AI, you don't build your own LLMs. You're not importing your own culture, right? Think about that. You're a generation of children that are coming online, right? They're being born and they're going to be so native to digital assets. They're probably going to look at us and say, what do you mean your agent is not connected to your bank account? We had this conversation earlier. So I think they are absolutely, there are tools of an economic warcraft because you need to kind of decide in a country, will you create a stable coin to trade then your goods and services through that, right? Are you going to go with the US dollar? Are you going to go with BRICS, right? It is a question at the moment. So I think a lot of people are asking that, not just about the stable currencies, but also about AI too.
Yeah. We have just a few seconds left, but I do want to get sort of a last minute prediction from everyone. Zach, you first. What do you see in the next 5 years? How is this space going to look different?
I saw Stan Druckenmiller and Larry Fink the other day. I think Stan Druckenmiller said all payments will be done through stablecoins by 2030. Larry Fink, has a prediction that all assets will be tokenized, in the not so distant future. I don't think they're too far off. This is just an improved system to what currently exists. So,
Brad, in one word.
People overestimate what happens in 5 years and underestimate what happens in 10 years. I'll subscribe. The stablecoin payment wave is happening, and it's going to happen fast.
Maya, one word.
I agree with Brad.
Okay. We're going to have to leave it there. Thank you so much. Really fantastic. I think to hear your thoughts on this.
Well, I don't think he's wrong about that.
No, not at all. I'm gonna be honest with you. While we were listening to this, I was peeking into that protocol that somebody mentioned, and it's giving me low key bad vibes. I'll go over it towards the end. I want to continue down the stablecoin conversation first. I want to play this perspective that myself and Aqua had shared on a live call on, I believe it was Monday night. And what this gentleman said stood out to me. Mind you, again, this gentleman comes from one of the largest banks that's actively involved in crypto, Signum. He is the chief investment officer at Signum Bank, Fabian Dori. And he shares the perspective that I gave to everybody on that podcast on Monday, where I specifically said, like, even though market prices are down right now across the board in crypto, and even today continue to just get absolutely obliterated, in my personal opinion, this is not a prolonged, extensive crypto winter. This is a fundamentally driven pullback. We obviously, of course, have tightening liquidity conditions, upbeat labor market figures from the United States, and higher inflationary figures that have pushed back on rate cut prospects. Shoot, even recently there was headlines around the prospects of the Federal Reserve, depending on how inflation comes out in the coming months ahead, that they might even need to hike rates, which would be absolutely horrible. Freaking multiple Fed speakers this week came out hawkish leaning, pushing back on the rate cut prospects. They even came out with the plot to possibly tighten liquidity conditions further. We've seen safe haven demand. We've seen geopolitical tensions, tariff-related ongoing happenings create massive uncertainty in the markets. And so there's just this huge risk-off backdrop. But the underlying infrastructure in crypto, in my personal opinion, has never been more supportive and bullish ever before in history. And when we do get this Clarity Act passed and we see the regulatory green light, is also something for the first time ever in history that we have never seen before in crypto. So yes, right now prices are down and the sentiment is definitely at all-time lows, especially amongst uneducated retail investors. But in my personal opinion, now is not the time to be bearish. And so the clips that I'm going to play moving forward kind of support that thesis. And they're all perspectives from globally systemic important organizations or businesses or really embedded people into this crypto ecosystem. So, take a second and just listen. This is, again, a gentleman who shares the same perspective as me, but he comes from, a bank. So just take a second here and listen, and then you guys can talk on this if you have anything to say, Aqua.
Welcome to CCN.
Hello, Lorena. Thanks for having me.
Thank you. I'm looking forward to this conversation. So we're going to start straight into crypto. So you have a report that suggests that we are not entering another crypto winter. What indicators support that view despite recent market turbulence?
Yes, exactly. Our hypothesis is that the current market volatility is more caused by liquidity and by sentiment than by fundamentals that would be deteriorating. And that hypothesis, I would say, is well substantiated if you look at the data, right? We see, for example, that overall crypto markets have been put on thinner ice for quite some time by the fact that there is still quite some controversy around whether the 4-year cycle, the historical 4-year cycle, that this would repeat itself again, leading to drawdowns into 2026. So I think that just led to marginal supply being a bit higher, and with that, the market being, so to say, on a thinner ice. Then we have seen crypto-specific events very much on the liquidity side as well, such as the historical liquidation event on October 10th that significantly reduced the risk appetite both by investors, but especially also by market makers, and then led to less supply from them and again, lower liquidity. But then also concerns around the store of value characteristics, mainly of Bitcoin, because of quantum risk or quantum computing risk, because of concerns that if the drawdowns continue, digital asset treasury companies would be forced to sell some of their exposure. And last but not least, obviously, the delay on the regulatory side. So this all led to, on the one hand, deteriorating liquidity conditions, but also heavily impacting sentiment. If we, however, look at the fundamental data, be that on the macroeconomic side with the business cycle, the interest rate cycle, inflation pressure, but also on-chain economics, then we see that the fundamentals are not only still strong, but rather still improving. And as you outlined, that gives us the confidence that our hypothesis that we are not entering into another crypto or even an ice age, that this is not the case.
Okay, and considering the geopolitical situation that we're facing.
Right. So, in a nutshell, I just like to back up my personal opinions and, perspectives about the market, ongoing happenings from an institutional standpoint. And it was just great to hear somebody from a bank align with what I said on Monday's podcast about how, the reason for the downturn right now is specifically fundamentally driven due to the risk off backdrop that we're seeing. So yeah, I just looked up another thing right now about this Fortis X profile, and it's looking not so great. So I'm going to continue to keep pulling up tabs while we're playing these clips. Did you guys have anything to say on what this gentleman said before we roll over?
No,
All right.
you're good.
All right, cool. All right, so this next one, back to the stablecoin talk, right? We had the CEO of Western Union, Devin McGranahan, at this Digital Asset Summit 2026 take place. I think this was this week that this summit happened. And listen to what he says here. This is a super bullish clip. And I would love to hear your guys' take on it, Aqua, if you all are available to talk on this clip. But he says some pretty crazy things about, offering digital assets to all of Western Union's clients. And I just feel like, to me, when I heard this clip and why I posted it is because it just proves that a traditional piece of the financial system, Western Union, which I know I grew up with using, is enabling digital assets. And whatever that category you whether it's crypto or CBDCs or stable coins that you fall like digital assets into, it's just still the fact that the CEO of Western Union sat on stage this week and confirmed that they're going to offer digital assets to hundreds of millions of their clients, which is super bullish in my personal opinion. So just listen to what he says here.
Get more efficient. And so with the passage of the Genius Act, we saw an opportunity to leverage stablecoins to do a couple of things. One, on any given day, we have a couple of $1 billion floating around in the system. So we solved the problem a long time ago of consumers being able to send consumers money and being able to pick it up instantly. So, people talk a lot about, oh, well, crypto will be able to make it real time. It already is real time. The problem is it keeps a couple of $1 billion of mine floating around in the system to pre-fund all those transactions using the Swift banking system. So we have to wait for T+2, T+3. And so stablecoins at an institutional level allow us to take a lot of capital out of the system to make it more efficient. The second thing it does is we're opening up our network to lots of other people who want to get access to basically off-ramps in tough places around the world. All the infrastructure lives there. We have all the local, treasury departments, and we can do FX exchange. And so if you have a digital asset in a country where we have infrastructure, we'll now enable you basically to walk into any Western Union or send it to any bank account in our network pretty seamlessly. So kind of as an off-ramp at scale that allows that kind of instant liquidity option, we find a lot of people are finding that attractive.
Do you think it's more about the internal efficiency and kind of getting rid of that multi-billion dollars of float, or is it more about improving the customer experience, or a little bit of both?
So the customer experience won't change. Won't change.
Yeah.
We'll talk about how the value proposition for some people might change, but the customer experience doesn't change. Today, you can send money to any one of 191 countries pretty much in real time, and you're still able to do that. There is a lot of efficiency. So if I can free up a couple $1 billion of capital, I can buy back half the company because we have cash sitting on the balance sheet to make all this thing work that all of a sudden I can get access to. But you then have to, the work in this is getting all of our partners around the world to be able to accept stablecoin, to settle in stablecoin, to get that institutional grade money movement. And again, we're talking hundreds of billions of dollars. There's only think there's only $300 billion of issued stablecoin, right? So I'm talking about being able to take my company, which is basically the equivalent of the entire stablecoin market, and move it into stablecoins in 100 countries around the world. So there's a big infrastructure play that we got to get it right.
What's the scale there? How many customers do you guys have?
100 million.
100 million customers?
100 million consumers. And so the value proposition change, though, for some of them is, by the way the system is designed today, customers have to accept the local currency. Now, in some countries, they also are dual currency countries, so you can accept dollars, so like in Peru or different places, but lots of countries, you can only accept local currency. So when you send $100 from New York to Bolivia, you're paying out in bolivars. It's a country that's had some political instability, some inflation. The value proposition change will be, you can now accept a Western Union stablecoin that you can hold in that country until you want the bolivars. So you can isolate yourself from the currency fluctuations, the political instability, but more importantly, we're also going to be able to give people stablecoin backed cards. So you can walk into a Western Union and you can walk out with a stablecoin card, and that in essence is almost a bank account. So it's a US dollar denominated card that's backed by the stablecoin, and so you can keep it on the card in US dollar denominated asset. You can then spend it at a point of sale. You can add money to it. So in essence, we're going to be giving people in these countries access to the banking system and to bank accounts without actually having to open bank accounts for them, which is really hard in many of these countries. So that value proposition change for our received customers is actually a pretty big deal.
And so you can now open essentially US bank accounts for all 100 million customers. You couldn't do that before stablecoins.
You certainly couldn't do that before. Right? They aren't bank accounts, they're stable cards, but they function kind of like having a bank account and a dollar. Like if you live in Brazil and you're above a certain wealth level, you have an offshore bank account. So you have a bank account in Miami or in London or in Switzerland, just as a way to hedge the Brazilian economy and the inflation. And it's a very accepted way that people in that country conduct their financial affairs. But lower income people don't have access to that. They can't open a bank account in Miami or in London. And private bankers don't have the time or interest in opening it for them. But a stable card proxies that same ability to hold. Now, they're not going to hold $100,000. They're going to hold $100. But for them, that $100 is as important as the $100,000 for you. Right. And so it is a value proposition change that we're excited about.
Yeah. Do you, when you
Yo, how much did he say in the very beginning? I just want to make sure I heard him correctly. He said that they have 100 million consumers.
100 million customers.
Yeah.
And they're
Customers,
and they're going to be willing to offer them digital assets. Go ahead, Kev.
Nah, man. I just want to touch on that because Western Union is really big in Africa, Uganda. So it kind of plays into what I've been thinking about, how the next 100 million users are going to come from the other part of the world, like Africa and all these other small third world countries. That's where the rest of the users are going to come in.
And there's a lot of projects right now on Stellar Lumens that's been there for a while that are tapping in to that. And I remember back when I was using the Lobster wallet quite a bit, Western Union had an option inside the Lobster wallet. So I haven't followed up to see what that relationship is still like today. But yeah, like, the project is called Afrium. So
yeah. Still, I think regardless, bro, like just what he said in a nutshell, like green lights this space. Like the quote, we are willing to offer 100 million of our customers digital assets, is just bullish as shit. It's like super massive.
Yeah, bro.
This post was very interesting too, considering Brad Garlinghouse's comments on the stage just at the Miami conference. Daniel, I'm not going to butcher this dude's last name, CEO of the European Blockchain Convention, said in his LinkedIn profile, Tether built the largest stablecoin in the world without a Big Four audit. And now, for the first time ever, it has secured one. In my opinion, this is not really about Tether becoming more responsible. It's about who their next customer is. The institutions building the next layer of financial infrastructure, and those guys have compliance departments. They can't sign off on an unaudited product. So Tether is getting audited not because they changed, but because the room they want to be in has different rules. And we come over here to the official announcement. This is from this past week, March 24th, 2026. Tether signs a Big Four firm to complete its first full audit, setting a new quality standard for the digital asset economy. The largest company in the digital asset industry announced that it has entered a formal engagement with a Big Four accounting firm to complete its first full independent financial statement audit, which is slated to be the biggest ever inaugural audit in the history of financial markets, at a scale rarely seen outside of the world's largest sovereign institutions and encompassing a uniquely complex mix of digital assets, traditional reserves, and tokenized liabilities. This audit marks a defining moment not only for Tether, but for the evolution of modern finance itself. This milestone reinforces Tether's role as a category leader and its commitment to delivering the highest level of transparency, stability, and assurance available in global finance. I low-key feel like this puts a complete end to all that speculation that Tether wasn't going to be a major market participant. You know, that like 2022 to 2023, Tether's going to debase and go away and it's fraudulent and all this crap. No.
Yeah, I don't think so either.
I think this puts its stamp on. Coming over here, this was another huge one, bro. I don't know if you heard this one, this clip right here. This is the CEO of Rumble. All right, I want your reaction real time to this. Let's see what you have to say about this one. You too, Kev. But this is the CEO of Rumble, and listen to what he says about crypto. This is, by the way, from the Blockchain Summit 2026 that took place, I don't know, less than a week or two ago. So listen to what he has to say.
Whether you see digital assets as more of a side bet for Rumble, but it sounds like it is more of a long-term vision for Rumble as a company from everything that you just said.
100%. I actually think the whole market moves there. In whether it's 5 years or 10 years, I think the world is going to move there. And the platform that's the first market mover when that time comes is going to benefit. Like, I started Rumble in 2013. Rumble was a great business for 2, 3, 4, 5 years. But by 2020, something really happened. Censorship became like a real thing and it accelerated really fast. And we were at the right place at the right time. I think the same thing will happen with crypto and the creator economy. It's just a matter of time till the switch flips and people realize, like, what are we doing? Like, why aren't we adopting this? This is a no-brainer. I think that same thing will happen. It could take 2 years, it could take 3 years, but it's going to take, when it does happen, Rumble will be in the lead with that, with the best product for that. And we'll attract in the entire creator economy and users with that.
Can I ask how the interest came about? Was it a friendship with Paolo? How did the partnership with Tether come about? How did the interest in crypto really spark for you?
Well, it was prior to, I've always been like a huge advocate for blockchain. I remember doing a presentation on this like maybe a decade ago at some conference. And I've always been like very, very bullish on the blockchain technology. So like even prior to even meeting Paolo and meeting, you know, the Tether folks, we set up a Bitcoin treasury reserve and we hold Bitcoin as a company just because we believe in that for the long term.
Yeah, bro.
I wouldn't be surprised that, I mean, YouTube is massive. I wouldn't be surprised though if Rumble like catches up and it's like a Pepsi versus Coca-Cola type of, you know, level, because Pepsi's up there with Coke, vice versa. But YouTube, I feel like, is way up there right now.
100%. I was going to say the fact that he said he believes everything and everyone will move to crypto in the next 5 to 10 years.
Yeah.
And that people massive. They haven't woken up to it yet. I think he couldn't have said that better.
Yeah.
Nah, that's facts. And to see, I don't know if you guys heard about this new bank called SoFi Bank. They're regulated by the Federal Reserve, and you can buy crypto. You can do all kinds of stuff on it. You can park your money, receive like 10%. It's pretty interesting.
Damn. I haven't seen it, bro. Pull it up. Let's talk about it when we get to the DeFi aspect of today.
Yeah.
You said 10% too? That's solid.
Yeah.
Especially if it's regulated, it's solid, bro, because that goes hand in hand with what was announced last week that we touched on Aqua with freaking SBI announcing 10% on USDC.
Yeah, that's right. They definitely did.
I don't know who this gentleman is off the top of my head, but again, just another video clip from the Digital Asset Summit. And they talk about how right now it's not the time to be negative and how instead it's actually really positive for this space. So just take a second and listen, and it just sets the tone for the shift in mentality from this fear-based mentality because everything's down right now to this infrastructure mentality, where right now the infrastructure in crypto is more solid than it has ever been in crypto's history.
Come together now for sure.
Yeah, yeah. I will say, I think that despite it being a really seemingly bear market, at least myself, who's been in this space now since like 2012 or 2013, I haven't found there to be what seems like a better time to be building. It's definitely harder to raise money at this point, and token prices across the board are depressed, and it's requiring founders to be much more thoughtful about what their team composition is going to be like. But just last week, the SEC offered guidance around tokens. Clarity looks like it hopefully is going to pass sometime in the next quarter or two. We had the Genius Act last year. Commissioner Hester Peirce and Paul Atkins have been amazing in terms of just their view on what they think needs to happen. Privacy looks like it's moving forward. There was even some IRS guidance last week. So from my perspective, I've been writing about and working within this industry for well over a decade at this point. I've never felt more bullish about what's going on. And I'd be curious if you think the same, because so many founders are depressed at this point. And I'm looking around like, why would you be depressed? This is amazing.
Yeah, I feel the same way. I mean, it's unfortunate that so much of the some of the sentiment just kind of stands on like the some of the crypto majors in terms of where the prices are today. But in terms of the activity, the development going on, the build that's actually happening, because you have some of this expanded total addressable market that we can really tap into going forward. I mean, it really is very early innings. And I think everything we can do to try to keep the builders engaged. You touched on talent. Stresses me out that you guys feel like you don't know what you're doing, because I think we're looking to you guys to help us really continue to move forward and understand.
So I just wanted to play that clip real fast because it just touches on this space. You know, now's the time not to be bearish. Now's the time to look at everything that's happening as an opportunity in this space, right? And again, talk tracks, if you guys want to jump in, you're more than welcome. I'm just going to play video after video after video. If something hits, then, you know, jump on it.
No doubt. Yeah, no doubt.
This is Robin Vince, CEO of the oldest bank in the United States history, BNY. And in this one, he goes on to talk about how right now is a unique moment and a major opportunity in history. And, you know, again, like, from the very onset of all the video clips that we played, it's just all these perspectives that don't really match the current sentiment. And so take that into consideration. Once the sentiment matches what these people are saying, which eventually it will, we will come out of this slump. We will see risk assets flourish again and the sentiment flip back risk on. I would not want to be a sidelined market participant when institutions get the green light to come into this space coupled with a risk on backdrop. Right? Because for the first time ever in history, in a risk-on backdrop, crypto is going to be allotted in institutional portfolios. And we've never seen a bull market like that before in the 17 years that crypto has existed. So take a second and listen to this gentleman here, Robin Vince from BNY.
Really take advantage of the latest and greatest of what's available. And so our AI story has been one of 3 years really investing and innovating. And our digital asset story is very similar. We were the first large bank to offer digital asset custody. And we're excited about digital assets, AI, other technologies, and how they come together over time.
Now, I know you weren't around for a lot of those technological innovations, but it really feels like with AI and digital assets, we're at a pretty unique moment in the history of financial services. How would you kind of characterize that relative to all of those technologies that you outlined throughout your history?
It feels to me like an incredibly exciting time. I think there's a risk that we could somehow fall into the trap, and this has been true over the ages, that say this time it's different, this time the whole world has completely changed, because it's the moment that we're living in. So it always tends to be that the present is the most clear and sort of feels like the most impactful. But I do think these technologies are truly, truly revolutionary. And the fact that they come together at similar times from a maturity point of view, digital assets, technology, blockchain, the opportunities to do things and innovate financial services, reinvent, reimagine is very exciting. It's been going on for a while. I think we're hitting a point of maturity and acceleration. And then obviously with AI, it's an even quicker curve and it's accelerating. But those two things over the course of the next 5 or 10 years, and as they come together, agentic commerce, quite molecular opportunities with digital assets, seeing how the two things come together, I think it's a very, very exciting time for people, for users of the technology, but also for innovators who want to actually be part of that innovation story. If you stick your head in the sand and you think it's not really happening, or somehow it's not for me, or it's just a piece of tech, I'll leave it to my engineering teams, I think you're just missing an opportunity. We certainly at BNY don't want to fall into that trap.
Yeah, you have AI boot camps.
This guy sounds like he's on top of it, bro. He's aligned with what the future is bringing. We've been talking about all this AI agents. We haven't talked about AI agents in a while, though, I feel like.
Yeah, because fuck AI agents.
I know.
Y'all know I lost $500,000 on AI agents. Fuck, man.
Oh, man, yeah.
I haven't redug up AI agents since I got rug pulled. So.
Yeah, that was terrible.
It's definitely something that we're going to have to come back and touch on, because he did just mention, which falls in hand with what Jeremy Allaire said, the integration between digital assets and AI agents. And, this dude isn't some random bloke. He's freaking the CEO of BNY. So he knows what he's talking about. And the fact that he just said that we're confident about the future of digital assets and that we as a bank wouldn't want to be sidelined, right? He said we wouldn't want to have our head in the sand missing out on this opportunity, and again, just solidifies and green lights the opportunity that we have as retail investors. I like what Uncle Cam said in the chat, because that goes hand in hand with what this dude just said, because he said 5 to 10 years. And Uncle Cam in the chat said 5 to 10 years is ancient times. We're in that 6-month memory span, 1 to 2 years max. I agree. I think it's go time. I think as soon as we get these regulatory green lights and we see the sentiment flip back into the favor of risk assets, when we supersede the most local all-time high in the total cryptocurrency market cap, we ain't never getting an opportunity to buy sub $2.3 trillion again. Me and Aqua been saying this.
Yeah. And it correlates with the big push too with robots right now. Seeing it all over X, and then now they're doing it directly with the president and the first lady. This is a mass push for humans to start getting, comfortable with humanoids. I don't know if you've seen the sunrise when I came onto X. They had it looked like a Tesla robot at a school playing with kids. Did you see that?
Nah, bro, but that's
crazy.
They're pushing that agenda. The digital agenda is being pushed heavy right now.
You know what somebody said in our Discord this rising, which I agree with, is that notice how right now there's a whole bunch of tensions and things heating up around the world. And then just now they're pushing, robots. What if to get this mass rollout of robots, they start another, COVID-like scenario where, everybody human is locked in, everybody human is suffering financially. You guys remember, I can't talk about it because we're on YouTube Live, but you all remember the 2019-2020 timeframe, what happened. They locked everybody down, they were jabbing everybody was on universal basic income and freaking support from the government. What if something like that happens again, and then the whole entire time while humans are all stuck inside their home, they're like, oh well, AI can't catch a virus, or robots can't catch a virus. So
facts.
That's when they do the rollout, bro. That would be crazy.
Yeah, bro. Super crazy. Yeah, I just found that video that I was telling you about with the robot playing with the kids. If you want to show it real quick,
Yeah,
it's
yeah.
just crazy.
Pull it up to the stage. Let's show the
Yeah,
people.
it's like 20 seconds here. Hold on one second. Hold on. Let me share my screen here.
Ladies and gentlemen, welcome to New York City. Explore the towering skyscrapers, bustling streets, and endless possibilities. Sit back, relax, and soak in the mesmerizing aerial views of this iconic metropolis.
You look lonely. I can fix that.
That's crazy, right?
Bro, poor kids, they're straight up being indoctrinated into the system like right now, and they don't even realize that their poor little brains, they're all like, because what else is a kid gonna do? You know, a kid, oh, freaking robot, oh my gosh, this is so cool. They don't understand the big grand scheme of it all and how literally they're playing with something that is going to outpace them in advancements over the next, 10 to 15 years.
Facts, bro. Facts. I feel like too in the near future, a lot of kids are gonna get raised by robots too.
Come on, bro. You already know that, bro. Robots
lot
gonna
of-
replace the nanny.
Robot
They're gonna be cooking
nanny.
and cleaning.
Yeah.
Oh, come on, bro.
And there's going to be a natural attachment because humans naturally love, right? So there's going to be an attachment with like probably my kids' kids. They're going to have
Right.
an attachment to these robots and like
Robot
cry
law.
if something bad happens. Type
We
of thing.
already seen the indoctrination in the movies, bro. What was that one movie, Subservience, bro, with frickin' Megan Fox in it, and the dude
Yeah.
smashes the robot?
Yeah. It's actually more normal to date a robot than it is to date another human in that movie.
Oh my
That's just crazy, bro. That's
The
just crazy.
future's gonna be so wild. Hey, look, as long as all these robots and everybody's transacting with crypto, we good, So
Yeah. Oh shit.
we'll be somewhere where everybody else is not because we'll be financially stable enough to afford these, crazy locations when everybody else is stuck on universal basic income because we locked in. Oh man, it sucks to
100,
say.
bro.
Cyphers, you getting a robot?
Yeah, I'm getting a robot to fold my laundry. What you talking about, bro? Of course. Of course. I'm getting 2 robots, matter of fact. One to do my laundry and one to do my dishes.
I'm dead. You Aqua? You gonna get
Yeah,
some
for
robot?
sure. Yeah, to do stuff around the house, like what you just said, fold laundry and all that shit. Absolutely, bro. Folding laundry, like you ever see those posts where it's like it tells you like, all right, if you live a normal lifespan to like 65, you spent 4 years of the 65 years that you were alive brushing your teeth. You spent another 30 years sleeping, right? And they break it all down for you.
With jelly
Like,
beans, right? You talking about with the jelly beans?
yeah, I think so. Yeah. I just want more time to do stuff that I want to do. Like, I don't necessarily want to fold my laundry, you know what I'm saying? And do dishes.
Yeah.
For real, bro. If you keep trading like a badass motherfucker that I know you are, and like how we do in this community, you could just pay a human to do all that shit, low key.
Yeah, facts.
Yeah, but you know
matter
how
of fact,
humans be. That's robot.
well, I'll tell you this much. As long as actually, I don't even know. I don't even want to think about it because there's a portion of me that wants to believe and hope that this whole entire AI takeover that's happening right now doesn't end badly for the human race. And maybe it's just because, we grew up with sci-fi movies like The Terminator and freaking The Matrix and all this stuff where that's why we think that it's going to end badly. But it's only going to take one rogue AI to just completely F up everything for the humans. And like on top of that too, like right now, another big thing that's people aren't really paying attention to is AI's ability to create images on the internet and videos on the internet that are undistinguishable from reality. And so this like we could get to a point where you could be watching us live right now and you might not even know that we're not even live. It's just AI went rogue and like took over and like started. No, for real, it's happening, bro. It's really crazy, So
No,
I
that's
was
real, bro.
I was reading this piece from I was from one of the big four consulting firms. It was like EY or Deloitte or, one of them. I don't remember off the top of my head, but it was talking about how by 2030, AI is going to be so realistic that humans are pretty much going to be, they're going to have, I don't remember what, it was like dysmorphia or some like big word that they used where most humans are not going to be able to distinguish reality from false reality because of AI in the future. And that is scary,
Yeah, I can totally see it as well. I mean, it's happening in real time right now, like you said. So,
and two, like, have you guys seen those? There's two things that AI replacing jobs goes so much deeper for the economy too. Like, the music industry or the movie industry, right? Have you guys seen those like songs that AI creates and they like go viral? Like those, like, I'll give you an example. Like there's this AI that calls himself AI Drake, and he like makes Drake music, but it's like AI and it's slightly different than Drake, but that shit pops, yo.
It still slaps, bro.
It still slaps, huh? Yeah.
It slaps. And I'm like, why would anybody listen to Drake when this AI Drake slapping,
Yeah.
Yeah.
I'd be
I remember
asking,
that.
bro, I wonder how long these guys have had access to AI. Like some of these rappers, bro, I feel like they've been having AI write their bars, bro. Real talk.
It's possible. It's very possible. And then the movies too. I don't know if you guys have seen them AI movies. There was like this I don't know what company it was off the top of my head. I saw it on X the other day, but it was like this company that made an AI movie in 30 minutes, and it's like a 2.5 hour long movie, and it's freaking crazy, bro. Crazy. And it's all AI. There's no actors in it. There's no actors whatsoever. It's literally all AI.
Mhm.
And it's, I mean, think about all the mechanics and how much it costs to go into a movie. And I remember reading a bit about the movie and who created it. And they were saying that it costs less than, like, obviously, of course, outside of the software, it costs less than $5,000 to make this AI movie.
Bro, I'm thinking about it right now. Imagine if there's like another bigger type of situation, like the Epstein file situation, but it listed like every single musician and, actor and actress. And at the same time, you have AI and this ability for it to do just as good, maybe if not better. I can see a day where it's like trendy and it's cool and it's like a woke conscious to not listen to one of these celebrities and to listen to AI music or watch an AI movie because that there was no, blood on the back end that these actors went through and bloodshed and rituals and all the, stuff that comes with Hollywood. Like there could be a very pivotal day, especially if the whole world was told this, like they are the Epstein files. Just throwing that out there. I don't know. Who knows?
No,
Right?
I agree with you 110%. I think actors and music artists, unfortunately, and because humans naturally tend to gravitate towards trends, will eventually be replaced. And the cultural, you'll only find music, primarily music. I don't think I think the movie industry is absolutely toasted, bro, toasted. Why do you need actors anymore? You don't.
Yeah.
But in cultural areas where they're very prone to holding on to native cultures, which America isn't really anymore. I mean, I would say that pretty much nobody facilitates or practices culture in America anymore. Like, what the heck is an American culture? I couldn't tell you. And I've been an American for 32 years, But in places like South America, where music is very traditional because of their heritage, it might still, be a thing. But I agree with you, bro.
Yeah, I think that's a great point. I think like the ones that are tapped in and like the villages, especially like in Africa, all that natural music that they make, from natural organic pieces of the planet, you know what I mean? They make their drums with like natural leather from a calf or whatever. I feel like that music is always going to be it's always going to have a place in our heart, especially to listen to it live. Like when you listen to the drums, especially natural drums, the way it hits my soul, I'm sure that you guys are the same, especially like my heart, you know what I mean? If they know how to hit that shit nice, like
because the market take
all right, let's carry on with this DeFi conversation real quick. I know y'all know who this is. Stani from Aave, right? The biggest DeFi protocol in all of crypto. Right? They're the biggest DeFi protocol in all of crypto. Okay.
Yeah, biggest borrowing and lending. As a matter of fact, it's the biggest borrowing and lending in the entire planet, apparently. So.
That's my dog. Slide.
That's my dog. Listen to what he says about how DeFi has been stress tested, it's battle tested, and it is more resilient now than traditional finance. This to me, because we've been telling people this, since 2024. Me, you, and Kev, bro, we've been on this wave of telling people everything's going to roll over to DeFi rails, and everybody's going to get on the wave of lending their assets out, borrowing against them, not selling their crypto, looping, earning yield. This to me is verbal confirmation of what we've been saying. And the fact that he has the audacity at this digital asset summit, which was a TradFi summit, like literally everybody there was from TradFi, and he says, DeFi is better than TradFi or more resilient than TradFi, speaks loudly. So just take a second and listen to this one.
The opportunity of being able to reallocate the capital quite quickly because the markets move and change. And a lot of DeFi yield and also crypto yield is largely still based on the opportunity that exists in DeFi, in crypto, which is leverage. So when there's a lot of demand on leverage and there's a positive correlation on the market, that increases the funding rates for traders and also the borrowing costs for borrowers and the yield in DeFi as well. And this is sort of like 95% of the DeFi space. And I think this is actually a really good thing because being able to take something like these DeFi protocols and battle test them with a really volatile asset class has been really amazing because it also showcases that DeFi protocols are actually the most resilient infrastructure. So for example, a couple of months ago in a market downturn, Aave liquidated almost $500 million worth of collateral. October the 10th, we liquidated over $250 million worth of collateral in just a few minutes. Programmatically automated, fully in a transparent fashion. That is something that the existing financial system doesn't have at the same sort of like transparency and also ability to participate in those liquidation options. But I do think that with this, with RWAs coming more on chain and seeing like a model of Athena where you can basically construct a strategy and bring it on chain and then being able to actually leverage that by using the obvious liquidity is sort of a way to bring more assets and reduce the exposure for the overall the crypto leverage and getting more yield from the diversified sources.
So, what he just said is crazy because he just said that traditional finance does not have the ability to do what DeFi did on the October 10th stress test. And by the way, a lot of people don't know that was a stress test. It was systemically planned for that to happen. And everything that's happening right now in crypto is all planned to stress test this environment before these institutions come in. And he just said it. That was a stress test. And DeFi remained compatible. DeFi remained resilient. And it did something that TradFi does not have the capability to do. Go ahead, Aqua. You're about to unmute.
Yeah, I feel like the key thing is he says it would prove that it's the most resilient. And I feel like if that aligns with all these institutions, with all these trillions of dollars, that's just great news to hear. You know what I mean? So
you put this out on your Twitter, I think, or maybe it wasn't your I don't remember where it was that you put it out, but if you want to read this real quick.
Yeah, I reposted it. That was Senator Loomis. She said, "Don't believe the FUD. We have worked on a bipartisan basis for the last few weeks to make changes. Title III that make this bill the strongest protection for DeFi and developers ever enacted. We have to pass the Clarity Act to get these protections." So, and I rock with that, bro. I'm gonna believe her. You know what I'm saying? Until otherwise, like.
Yeah,
there's a bunch of fun.
A bipartisan basis with both Democrats and Republicans working together, for protection for DeFi is something massive that when this space gets that, like if there was insurance for DeFi, which I mean, I know for some exchanges and some platforms there is, but as a whole, holy crap, the amount of money that's going to come into DeFi rails is going to be insanity.
Yeah, it will be true insanity, bro. It will be, because there would be just, yeah, they would. Some people wouldn't even need to know all that because they just see so much money coming in at DeFi and hearing it from this person and that person, and they would just flood in.
This was a good post a couple hours ago from Credora by Redstone. They said the question institutional allocators ask about DeFi is not whether the yields are attractive. The question is whether there is a risk framework that they can document and defend. And so considering what Stani from Aave said, what Senator Loomis is saying, this just goes to show that, you know, that TradFi understands that DeFi is maturing. And if you don't, now's the time to lock in, to tap in, to learn DeFi, to learn how to get your digital assets working for you, to take a mentorship or a course or something that breaks it down for you so you're at least aware of the possibilities. So that way, when you're comfortable, you can deploy and you're not falling behind. Especially if you have a very considerable amount of crypto. You know, you don't want it to just be sitting idle collecting dust, especially like think about this bear market or market downturn, whatever you want to call it that we're in. Who are the people that are going to come out on top? They're going to be the people that accumulate more block space in this game right now, just from the market's money, you know, earning passive income with their assets and compounding it every single day. I know I for a fact am going to have more, you know, actual physical tokens of the crypto assets that I like to hold in my portfolio, because every single day that we've been in this downturn since October, I've been earning yield on at least, I'd say 60% of my crypto portfolio right now. And I'm just compounding it every day, restacking it more and more.
Facts, bro. Facts. Shout out to the Metallicus ecosystem.
Shout out to the Metallicus. Literally, if you hold the ISO tokens right now and they're not earning for you in this downturn, you know, you got a BSA compliant platform, the only BSA compliant platform in the world. You know, everybody wants regulatory clarity on their DeFi protocols. You got one. And even though it's not like a substantiating amount of yield, something's better than nothing. You know, take advantage of that, not financial advice. But this says, until now, the largest liquid staking asset in crypto had no independent quantified risk assessment. ST-ETH represents over $20 billion in staked ETH. It is the most widely integrated asset in DeFi lending markets, and only the risk data available was raw market metrics, price history, TVL, and audit count. Raw data is useful. Standardized probability of default derives from the data that is actionable. Credora has published an independent risk rating for ST-ETH, and it got an A+ rating with a probability of default of only 0.10% annually. The assessment covers smart contract security, on-chain reserve transparency, price stability, market position, and governance architecture. Every input is public. The methodology is documented. A 0.10% PD on a $21 billion asset is a number a risk committee can evaluate. It can be compared against other positions. It can support an allocation decision at institutional scale. So, you know, I thought that this was great to see, because this just came out, you know, just a couple of days ago on March 17th. So just another thing that just shows the maturation of the DeFi ecosystem, that now we're starting to see these ratings that these institutions never had before. So now they can literally just go, they can look at the rating and they can say, okay, what's the risk rating? Oh, 0.10%. Well, we're allowed, you know, 2 to 5% risk. Great. We can allocate to this. Boom. You know, they don't have to do any of these crazy back-end checks. They have the trusted rating right here. They can pull it up, talk to their risk assessments, you know, team, and then start to allocate. And so this is just something in crypto that we have never had before. And it just goes to show there should be no reason why you're skeptical outside of doing your due diligence on the platforms that you're deploying on, but just understanding that the DeFi space is maturing and that these institutions are preparing with announcements like this to enter in at full scale. Huge. So I thought Kev would like that one. I pulled that one up real quick.
Appreciate you. You know I'm an ETH maxi at heart.
All right, real quick. Before we roll over into Canton, okay, because I want to obviously, of course, you know, talk about the announcements that we had from Canton, and then also go over just some recent clips from Yuval and something that Don Wilson said about $10 trillion possibly coming to the Canton Network. One of the individuals in the comments, I don't remember who it was. Let me scroll up real quick. Something Midwest, asked about this protocol on, I mean, I don't even know what it's on, if I'm being completely honest. So I want to cover that real quick just to kind of show you guys the due diligence that you should be doing. And mind you, I'm not here to tell you guys that this platform is a scam or not, but let's just use our common sense. And with assets like XRP, you know, you really have to be careful considering that XRP is one of those assets where everybody's brains are in a blender because of influencers out there who have been manipulating people for all these years, getting people to think that, you know, whatever theories they have that XRP is going to be some crazy high-end price, which I firmly believe in the future it will be. Mind you, I need to note that. But I know and I'm realistic that that's not going to happen right now in the current environment that we're trading in. And so, you know, what does that mean for the average retail investor in XRP? You have this notion of getting rich overnight, or at least I know a lot of people do. And when that doesn't happen and you bought at $3 plus and now your position's in a loss, what are you inclined to do? Oh, I need to go and earn my money back. So you want to go and earn yield on your XRP, and it's an enticement. And these scammers, they know that the XRP community is thirsty for gains right now. And it's just the honest truth. So the uneducated XRP enthusiast is going to go and they're going to deploy their XRP on the scam platform, and then they're going to get rug pulled. So I highly suggest that you do your due diligence, like serious due diligence. And if you come across any protocol that has at least more than 3 to 4 red flags, even if it's a real protocol and is doing real things, wait to deploy. Do not deploy, because you don't want to risk your hard-earned XRP on a platform that's just going to end up being a rug pull. When there's platforms out there that are BSA compliant, that are fully regulated and have actually been announced by Ripple themselves, that are compliant in the DeFi ecosystem. 2 of those platforms that myself and Aqua have touched on, and I'm not trying to shill these platforms to you guys, but they are regulated platforms with people who we know operate in this space with valid names and valid social medias and valid TVL and all these things. And that's the Loan Protocol on the XPR network, and this one that myself and Aqua have recently been touching on, which is Soil. And what I find interesting about what I'm about to show you guys right now, doing my breakdown and just the real quick due diligence, because how long have we been on this call? For an hour and 16 minutes. And I was able to pull all the stuff up that I'm about to show you guys that is a red flag to me, and why I wouldn't touch this fucking platform with a 10-foot pole with my XRP is because of this right here. So this is a physical announcement from XRPL Commons that says this is the first, I repeat, the first fully compliant DeFi protocol built on the XRP ledger, offering native yield to XRP holders. Okay. Now we know that XRP yield is coming. Right now they offer 8% on RLUSD. And this is an official announcement from XRPL Commons. So just take a second and listen. This is the type of stuff you want to hear about a DeFi protocol before you go out and deploy. This is like number one. You want to actually hear an official announcement from Ripple or from an extension of Ripple. This is XRPL Commons. Take a second and listen.
Hey everyone, we're here in London at the XRPL meetup, and we're extremely excited to be here with the amazing Soil team that have very, very recently launched the first DeFi product on the XRPL using Soil platform. So Nick, why don't you tell us all about it?
Yeah, hi guys, I'm Nicholas Motz here. I'm the CIO of Soil, one of the co-founders. So it's been over a week. We launched on XRPL, our RLUSD yield. We filled up our first vaults to $1 million, which is super exciting. We see the demand. We're getting emails when the next one is opening. Sneak peek, just now it's opening the new vaults. So super excited to what comes over. And yeah, over to you, Jacob.
Yeah, tell us what else is on the roadmap.
So the main product on the roadmap is an opportunity for users of XRP token to get lock these tokens in our protocol and earn a passive income based on the allocation. So I guess this would be pretty exciting and completely new product for customers on the native XRPL.
Amazing. And does this also include the RLUSD?
So the product will be mixed. Of course, more details to come, but we are thinking about two options. So first of all, if you lock XRP on our protocol, you will have an opportunity to get a native token as a reward, or RLUSD as a reward. So you can have a choice to decide what kind of reward do you prefer.
Fantastic.
If you want to build up your stake of XRP, or you want to get a reward in RLUSD. So a lot of options for the customers.
Very exciting. And tell us, how are you using the XRP ledger and some of the features, with the upcoming amendments that we have?
Yeah, so amendments is exciting. So thank you. First of all, thank you for your support, Odelia, and for common support. Thank you also for the big support of the community of XRPL, because they helped us, especially Clippenreiter, who take over the tests of the protocol, and he did a very deep dive into the protocol compliance, etc. So he was a huge support for us.
I just wanted you guys to hear that one part, that somebody from XRPL Commons did a deep dive on the compliance of this protocol. Mind you, again, this is the first fully regulated DeFi protocol on the XRPL. And so, this is an official announcement. This is the type of stuff you want to see. Now, coming over here, the first red flag of this platform that I want to show you guys, mind you, this is the platform here. And I'm not saying that this platform is a scam, because it might be something real. I personally don't think it is. Personally, like I said, I wouldn't touch this platform with a 10-foot pole. Let me show you guys why that is. Fortis X, who claims that they've been around in this space since 2018. So what is that? 8 years. Okay. So for 8 years, this platform claims to have been operational. And I'm going to show you guys all that real quick. First off, a red flag is affiliate links from these scammer accounts on YouTube. Okay, that's the first big red flag for any of these DeFi protocols, is if you see these large influencer accounts in the XRP community posting affiliation links. This just goes to show that there is some form of a pyramid scheme or benefit behind the scenes, where you sign up with this affiliation link via this influencer, and on the back end, they're getting paid. And after that, who cares about your XRP at the end of the day, right? They're getting a piece of the pie via your affiliation sign up for bringing your capital on chain. That is not DeFi. That's weird, right? That is mad weird. Why is this influencer getting capital, getting money for you using a decentralized protocol? Okay. That does not seem like DeFi to me. That seems like a pyramid scheme. So that's the first, red flag to me right there. Is that's like the first thing, actually, as a matter of fact, that popped up when I searched Fortis X on Twitter. And then when you actually go and you look at who Fortis X follows, it is literally all the freaking influencer accounts that just give you the moon boy targets on XRP. And you guys, I'm not going to call them out and show you guys that list, but all the ones you guys most likely know and heard of on X that give you the bullish moon boy targets, just go look at who Fortis X follows on X themselves. It's all the people that they know will pump out their, probably scam. Again, I'm not confirming that they're a scam. I'm just showing you guys why I think that this is a complete 100% red flag and you shouldn't touch it with a 10-foot pole. Okay, so here it is, FortisX.fi. They have 12.3K followers. And again, like I said, go click and look at who they are following. But coming over here, here's their website. All right. And you come down here, very interesting things. So it mentions, institutional compliance. They're hiring, careers, all this stuff. It looks very solid. It looks real, right? Legal compliance. They have terms and use. They have AML KYC down here, which was very interesting considering that up here on their homepage, it says that you don't have to KYC on the platform, right? So, right here, it says no KYC, you get instant access. That right there is an immediate red flag that they are not compliant. Because if you don't have to KYC on the platform, mind you, Soil, as an example, which was announced by XRPL Commons, Aqua can confirm, because he has used the platform, you have to KYC because they are compliant. Right, Aqua?
Facts, bro. Facts. I'm like, That doesn't make any sense to be compliant and you don't have to KYC. That's not in alignment with what we're hearing in these Senate hearings, where they're saying the same thing, KYC, right? So this is complete fraud, bro. Complete
And so,
fraud.
you know, just doing your due diligence, you know, you see, you know, as a retail trader, remember I explained the average XRP retail investor that's like super thirsty for gains and I need to make money and I probably bought at a top and I can make my money back. I'm not trying to be an asshole. I'm just being realistic, guys. This is not okay. This is not okay. You come here, no KYC, instant access. You know, uneducated retail investors that got into crypto a month ago or even a year ago that are like, oh my God, I got to get freaking gains. Oh, I could get 20% on my XRP. Red flag. Okay. Absolute red flag. You know, Doppler Finance. Go ahead.
It seems like there's some big names. Some of these names, I mean, the name that was pushing it, I'm forgetting the name right now, but from the X post, and then hearing another name of a channel inside the chat right now. This is like millions of views and people are seeing this. Millions of XRP holders are seeing this shit. And now that you're there, that Certec audit thing is a super red flag as well, because that was also on another scam that we had found in the past, and they claim to say that they use Certec. So I feel like that is complete bullshit as well, bro.
I'm going to show you more. I mean, it's not hard to see that this thing is a scam. So you come down here, okay, and you look at their docs. You know, you should look all these. I'm going to get into these announcements here too, because it says current and planned integrations. Okay, none of these current providers that they have on their list have made an official announcement that they're partnered or plan to, you know, partner with Fortis X. And that's an easy Google search anybody can go do. But I'm just watching. I'm going to continue to blow your mind. I'm not just here popping smoke. I'm going to show you guys everything that I found in the hour that we've been on this call. So you come down here and you click on their legal and compliance. Mind you, again, it says no KYC. Okay, so we're going to go to their AML KYC policy, which why do they have an AML KYC policy in the first place if you don't even have the KYC on the platform? Why? Because they want people to think that because they have this policy on their website that it is compliant, but it is not. You do a simple Google search, and I just use ChatGPT, so we'll come over here. And I said, has there been any official announcement that you can find on Fortis X? And I pay for the best subscription for ChatGPT so it can search the web for me and find anything. You know, I pay for the most expensive ChatGPT. Do you find anything on Fortis X offering XRP yield and any regulatory compliant announcement? Because you would think that if there's a platform out there offering 20% yield on XRP and it has had the regulatory approval stamp, that there would have been some type of formal announcement, considering if you go back to the platform that it has been around and claims to have been around since 2018. So just to show you guys that, you come back over to the platform, okay? You go to the products and let's look at, where did it say? You go to the company. So here we are. You go to the About Us page. Where did it say? Okay, so it says right here, you know, an independent company founded in 2018. Just go and do a Google search on anybody on the team, okay, because here's their team down here. Who's the fuck is this guy? Clay Patterson, head of protocol and product strategy, who doesn't even have a LinkedIn profile, but has his LinkedIn profile link. So you click this link on LinkedIn, and this is what pops up. Page doesn't exist. Dude's been in the game since 2018, but doesn't have a LinkedIn profile, and he runs the compliant protocol that offers 20% XRP? Fuck no, y'all. Come on now.
Yeah. What was the other dude below him?
Hold on, I'll go back. All right, this guy right here. This looks like an AI generated picture, and I wouldn't trust.
Yeah, that's what I was gonna say. That's an AI generated photo. Let's get real, bro. That is not a real dude. That's not. That's AI generated, bro. 1000%.
I mean, I agree 100%. Look at this. This shit looks scammy as fuck.
Yeah,
like
that looks AI generated, bro.
And anyways, you go to his LinkedIn profile. Mind you, he doesn't have Twitter or anything else. You know, this guy at least tried to put an X profile and an Instagram up here, but he doesn't have anything. You go to this dude's LinkedIn profile, and he used to work at freaking, he has no, hold on. Again, think about what we're trying to show you. You have a platform that's talking about compliance, okay, offering 20% XRP yield. And the experience that this guy has as the blockchain consultant, used to work at Upwork, which is a freelance agency where anybody can go and just post themselves as a freelancer and just get hired. And that's his credentials.
Damn. I wonder if this is like a hacked account and it's like not even like
All right. So, it doesn't end there, because I was like, all right, I'll give them the benefit of the doubt. Maybe they just suck at LinkedIn. Okay, cool. So then you come over here to their YouTube link. And again, considering that they claim to have been in this space since 2018, then why do they only have videos posted from a month ago? Super red flag. Right? They got no videos. It's just here, freaking 1 month ago, 3 months ago, and
bro, those videos look like they're AI generated as well. Is that a real video, bro?
I don't know. I'm not going to click on this shit because I'm not trying to get spammed on my computer, but
yeah.
So it just continues. And remember, I said at the beginning, if there's more than 4 red flags, don't touch it, even if it's real, because I'm not, again, saying that this platform is not real. What I'm just trying to show you guys is this does not meet the criteria, especially in the Wealth 28 Club, for us to deploy our hard-earned XRP. This is probably this is probably one of those platforms where all these influencers that are pushing this platform over on X should get hit with the freaking lawsuit if this platform goes bust. And come to find out, all these influencers were making affiliation on the back end, of all these people's hard-earned XRP. So anyways, you come down here. This is the last thing I'll show you guys is you got all these announcements, right? Current and planned integrations. You got data providers. They have, Infura, Alchemy, all these fucking Figment. No way. Figment is an institutional platform. Block Demon, institutional platform. You would think that Figment and Block Demon, if they partner with this freaking organization or whatever this is, Fortis X, they would have made some formal announcement. Wrong, because there is none whatsoever. Zero. You have news articles. They shout out CoinDesk here. I went over to CoinDesk and I searched CoinDesk Fortis X. If there was a CoinDesk announcement, it would have popped up right at the top of Google. Nothing whatsoever. So all these announcements are fake. No Masari announcement, no CoinGecko, Glassnode, Keiko, none of these organizations that they list on their website have even ever mentioned Fortis X. It's all just make-believe to get people to think that there's announcements who won't go to do the due diligence to go and search this stuff. And again, people will just fall victim to this scam. So, I'm not going to continue to show the rest of everything that I found. There's a bunch of stuff wrong with their business credentials that they list on their website. I found that, went down that rabbit hole.
Where is it? What's that legal tab all about? And
This
where
one-
do they say they're based out of?
I think the UK.
Oh yeah, I was gonna just say that. I should have said it before you just told me. If it's out of the UK, that's another major red flag.
Yeah, jurisdiction, Fortis X, England, Wales, July 2018.
Yeah, if it takes us to the UK website, it's almost like there's some sort of loophole to get this document made in the UK. It's like super easy for somebody to do it. At least that's what it seems like, because there's been multiple scams who claim all of this shit as well, right? And their paperwork is always out of the UK. So
so again, I'm not here to say that this platform is a scam by any means, because who knows, in the future, they could get their shit together and everything that I just showed you could completely change, which I want to give them the benefit of the doubt. But in regards to Midwest, I just hope that this breakdown, just real quick, pulling all this info up, shows you the level of seriousness that we take in the Wealth 28 Club, because this is what we do on all the platforms that we operate on. If they don't check the boxes, we don't deploy. We don't even put test amounts of capital. And even on the serious platforms, like the ones that actually get announced from Ripple themselves and from XRPL Commons like Soil, we're still only deploying test amounts because we're still in this nascent stage. You know, so I hope that this just shows you guys the level-headedness that we operate with here and why it's so important to be a part of a community. Because if you put this link in our Discord, in our private Discord in the Wealth 28 Club, and our cyber analyst, you know, went over this platform, I guarantee you Carlton would probably find like at least 20 more red flags. I bet you their internet infrastructure does not sit on a proper foundation. I could almost guarantee you that we could pull up some stuff behind the scenes with our cybersecurity analyst that just screams no bueno. You know, so I hope that you enjoyed that quick due diligence check, because yeah, and then even too, like, look, if you come over here, I just want to show you guys my Google search. Remember this guy who's the CEO of this platform, you know, they claim to have been around since 2018. So I just did a simple Google search of his name, Clay Patterson, Fortis X interview, because you would think if he's been in the space since 2018, you know, he would have some type of public something out there. You know, 2018 is a long time. I came in this space in 2016, and I don't think I have any videos still up from when I was making content in 2016 to 17. But you can definitely go back and scroll on my YouTube and see that I was making content 4 or 5 years ago. You know, so his name comes up blank. There's no, you know, I even went to the news. There's no freaking announcements. You can see here, I click news, and there isn't even, literally does not match any results. So, you know, way too many red flags. I would stay away. And anybody that's pumping this platform out, you know, for a affiliation link, I would honestly, like this guy, Jack the Rippler, I would report it and, you know, warn more people about it if you see it pop up, of course. And not warn them in a sense of calling it a scam, because that's not what I'm doing. I'm not calling it a scam. I'm just saying that it looks like one, and I would stay away from it, right? So anyways, hope you guys enjoyed that real quick. Let's go back to, actually, as a matter of fact, you know what? I don't know if you have time or whatever, Aqua and Kev, but I low-key got to wrap this up. This went on a little bit longer than I anticipated. So that's all that I have for today. I wanted to share this stuff with Canton. I mean, unless you guys have time real quick.
Yeah, you can run it, bro, for sure.
Yeah, I got a little bit more time.
All right, cool. Well, this is the last couple of video clips that I'll play. So, you know, we know that Canton had some major freaking announcements this week, like honestly, huge announcements, in my opinion. They partnered with Layer Zero this week. We had a huge announcement that Visa is becoming a super validator. And I think that that goes hand in hand with what Eric said on a podcast from Ledger just a couple of weeks ago, where I just want you guys to hear what he says, because this just confirms what he said is true. Listen to what he's got to say.
First one is many orders of magnitude bigger than the second.
Okay.
So it's not like, where is Canton setting up? We're setting up to be on the real world side of stuff, because it's also an enabler for the second one.
Mm-hmm.
If you have perfect, 24/7 creation and redemption across these things, helps you produce a higher quality permissionless wrapped asset. But it all starts with solving the liquidity problems on the real world side.
Mm-hmm.
So having the real assets, having the real lending markets that are deep, that have all the really large passive liquidity, getting all of that set up, it helps build better permissionless products.
Mm-hmm.
So it's both, but our focus primarily and overwhelmingly by effort and go to market is on the real world side of stuff.
And that's and how fast is that going?
You know, it's like the 10-year overnight success sort of thing. Right now, things are going incredibly fast.
Right.
There are some names that will come to market in the next 6 months that will blow people's minds. And the scale at which they come to market will completely catch people off guard. But that, some of these names have been on our cap table for a decade.
Yeah.
And, we've been working through all sorts of problems with them for a very long time. So the moons have definitely aligned.
Yeah.
I love that, bro.
Yeah. The moons are definitely aligned.
Yeah, that gave me goosebumps right there.
And then, fast forward to this week. And this week alone, we saw an announcement from Visa where at a TradFi summit, Visa got on stage and said, hey, look, we're partnering with Canton. I don't know if you guys saw that video clip, but that was pretty nuts to see that Visa got on stage and their whole entire presentation at the Digital Asset Summit was them saying that they're partnering with Canton. So that was pretty crazy. And then we had this one, March 26, 2026, we had Layer Zero announced that they're partnering with Canton to bring institutional assets to global crypto markets, which was pretty big. But more for us in the DeFi Wealth 28 Club, we got this stuff going on, you know? So Haven Digital Partners announced on their LinkedIn profile, Haven Digital Partners is launching the first permission peer-to-peer lending platform natively on the Canton Network, purpose-built for regulated and compliant on-chain finance, where it's got regulated licensed investment managers, on-chain smart contracts paired with off-chain enforceable legal agreements, qualified custodians, third-party qualified custody by BitGo, which is a huge institutional custody provider, compliant independent KYC, KYB, and AML wallet party ID screening for all participants, transparent full counterparty transparency. Like, this is the stuff you want to be hearing when you see about them talking about, you know, they're compliant with regulation. Then it talks about how they're tailored to complete flexibility on rates, durations, collateral, and repayment direction negotiations between parties with the Haven platform. And users are going to be able to lend Canton Coin, USDCX, or CBTC, which is the BTC version on Canton, and generate yield. They're going to be able to borrow against our holdings with flexible collateral options, on-chain auto margin efficient collateral management. Like, this just screams Wealth 28. So when this platform fully comes live and, you know, we're able to mess around with it, you know, I'll definitely continue to keep you guys updated. Here's the platform right here. You know, you can go and you can click on some things here. I'll save time in today's video break, then I won't do that. But this is going to be something interesting to keep an eye on. Coming over here to what Yuval said from this, I don't know what panel this was. It was an event that he was just recently at. I know he's in Shanghai right now somewhere, but I don't know if that's where this is from. However, this was uploaded just a day ago, still only has 289 views. And considering everything that we've showed you all in today's video breakdown, listen to what Yuval says about the amount of money that's still set to come on chain and how early we still are in this space, considering the sizable and addressable market that could come into blockchain, specifically like Canton. Take a second and listen.
And that's why it's taken so long to bring Canton to production. So, you know, we talk about the opportunity in blockchain, and I just want to put some, you know, we talk about, you know, asset mobility. Charlie brought a lot of the opportunity, asset mobility, composability. I totally agree. $42 trillion worth of assets in the world are effectively sitting idle. They're not being used. And the reality is not because people do not want to use them. It's because in order to use them, you have to mobilize them all over the world. So just for those that don't know what, like, Basel III after the financial crisis tells banks you have to hold certain things on your balance sheet based on your portfolio size. Now, if you are JP Morgan, you have legal entities all over the world, and you need to satisfy these requirements per every legal entity, meaning if you have money in the US, it does not satisfy your requirements in the UK and vice versa. And therefore, because you don't know what is going to happen tomorrow or in a few days, you do what you put liquidity buffers. You overcapitalize all of your legal entities. And not because you want to, because you have to. You have to meet your obligations. And that's also true for corporations. If you have, you know, payments to your employees, to your vendors, or you're supposed to receive, you have to have cash available in all kinds of jurisdictions, even though you could have potentially used it somewhere else. But because it takes time to move money or collateral, you effectively hold it idle. The fact that you can't move cash into yield-bearing assets in real time means you're sitting on idle cash as well. So our view is that the opportunity is ginormous, and to be honest, crypto haven't even scratched of the surface. You know, like we're nowhere close. And we'll talk about the broader repo in a second. So this is from RWA, and you know, to be clear, the amount of treasuries that have been had to tokenize to reach this number is even higher. 430 billion is really the volume that actually gets traded every day, give or take. And even that is nothing. So just to put it in perspective, the repo market globally is about $10.5 trillion notional every single day. So I'm very proud because Broadridge is almost 10% of the US repo market, but there's still a lot to do. And the only point here is not actually to gloat about Canton, but it's really to open the eyes that we're so far away from actually achieving the value of this technology. we're not even close from a scale to get to the point of, you know, really getting some serious returns.
So I wanted you guys to hear that one, how just far away we are from true scaled institutional adoption of the space in terms of the numbers that you've all just threw. You know, Broadridge alone, $10 trillion in repo, freaking $42 trillion in assets still just sitting idle, doing nothing. And all of that is about to change where we're standing at now. That's the crazy part. We're standing at a $2.3 trillion market with the brink of regulation and clarity coming to fruition for the first time in crypto's history. You don't want to be a market participant after these numbers start to come on chain. Not financial advice.
Bro, those numbers were mind blowing right now. And that talk track is the most like, damn. That just made me extremely bullish even more, bro.
Well, considering the fact that you've all specifically mentioned $10 trillion, coming over here, we know Don Wilson and his company DRW, you know, they're a validator, if not a super validator, if I'm not mistaken, on Canton. And, you know, they have millions of dollars invested into Canton. And listen to what he says. Again, at this, mind you, setting the precedence for this. This is Don Wilson sitting at the Digital Asset Summit, the same Digital Asset Summit where Visa, you know, think about it. They prepared, this Digital Asset Summit was announced months ago. Visa was announced coming to this Digital Asset Summit months ago, which means that months ago, whoever is involved in preparing Visa's, you know, presentation for the summit knew that they were going to present that they were partnering with Canton at this summit months in advance, which just goes to show what Eric is saying, that over the coming months ahead, we're going to see announcements that are going to blow people's minds. And he said that months ago. Now, fast forward to this week, we see that. And then Don Wilson at the same Digital Asset Summit talks about $10 trillion flowing through Canton Network. Listen to what he says here.
Yeah, we didn't put it into the programming, and I don't know why people aren't talking about it, but I feel like backstage, a lot of people are talking about it, which is what happens to as all these RWAs come on chain, the value on a chain dramatically increases. But what happens to a chain? I think there's starting to be a lot of concern of what happens to a chain when the value of assets on a chain is way higher than the value of a chain itself. And that starts to, you can kind of squint and start to see how that could skew some of the security incentives. I don't know if you guys have thought about this or.
Yeah, no, this is something that we've started to talk about and highlight. And again, you know, just, you know, as we thought about, okay, what are the characteristics of a chain to support traditional financial instruments? And so, you know, privacy was one of the things. You know, lack of front running ability is another. So, you know, MEV, that ability for people to reorder transactions to extract value, which is something that happens on top of Ethereum and Solana. Again, I mean, that's just not suitable for financial markets. And you know, this topic is another topic of chain security. So, you know, the DTCC is in the process of putting their assets on top of Canton. They'll probably make them available to other chains, but Canton is the first one. They hold $100 trillion of assets. Now, you know, imagine that this is just moderately successful and you get $10 trillion of assets on Canton. Well, the good thing is that the security protocol on Canton is not a proof of stake framework. It's you know, the consensus mechanism. And by the way, because of the privacy, you know, it's not like you could even go after a wallet and say, oh, here's a wallet that's got a bunch of assets in it. Let's try to re-engineer something here to you know, reorder where these assets are held. But if that same $10 trillion went on top of Ethereum or Solana, you now have this, you know, Ethereum's a $250 billion chain. So you now have 40 times the value on the chain. You know, Solana even worse, right? It's a, I don't know, 50 or $60 billion chain. So the multiple of RWAs that you have on the chain relative to the chain value creates this incentive to, oh, can we, you know, gain control of these of this chain and reorder things? I don't know. It becomes more and more attractive as the ratio of RWA to chain value increases.
Yeah.
You know, so what I want you guys to really pay attention to is he said, let's pretend that the DTCC tokenizing $100 trillion of their assets just becomes, he said the words moderately successful. So that's like,
yeah, 100%.
That's like kind of successful. That's not like extremely successful. That's moderately successful. And $10 trillion comes on the Canton.
That's more than the whole market cap of crypto. What's the market cap today, bro, of crypto?
2.3.
Yeah, bro, that would quickly take us from 2.3 to 12.3, and then 10 of it would be on Canton.
And he also specifically said at this digital asset summit, mind you, the same digital asset summit where, again, I stress the importance of Visa having pre-planned this announcement months in advance. Here it is right here, Visa. This is like a huge picture right there. Visa Canton, crazy announcement. The same stage that they announced this, Don Wilson says this. I don't think it's by accident. I think that it's all strategically, you know, planned. And I think personally that Canton, along with many other layer ones, is going to be one of the ones that survives long term. You know, so just pay attention to detail. None of these things are by accident. You know, not financial advice. There's always risk involved with investing in these digital assets, and who knows where the market's really going to go in the future. But I'm definitely allocated personally to Canton. I have Canton exposure in my portfolio, and I'm going to continue to dollar cost average into Canton as an asset in my portfolio for the long-term hold. So that's it really that I have to share with you guys today. I had a couple people in the chat ask about the research. You know, don't forget, all this research is readily available inside the private CyberX Discord. All this stuff, like some of these videos that we have in the Discord, some of the documents that we have in the Discord, are all the things that people should be watching and paying attention to. You know, we have here's an announcement from Sandy Call, Franklin Templeton, probably has no views. You know, like all the stuff that everybody should be mindful of during these types of market environments. It's all inside. Come tap in with us. Saw a couple of you guys talk about joining the Wealth 28 Club. We'd love to have you on the team. Come get a thorough understanding of the DeFi ecosystem, you know, wrapping your head around what's possible in the future, how to really do your due diligence on these protocols, and, you know, not just get scammed out there and deploy your hard-earned assets on a freaking protocol that's just going to get rug pulled. We talk about all that in the Wealth 28 Club. We conversate on these things inside the private CyberX Discord all throughout the week. Lock in with us, guys and gals. We'd love to have you on the team. That's really all that I have for you guys today. Enjoy your Friday. Enjoy your weekend. Kev, Aqua, if you guys have anything for the people, many blessings. You guys are looking at two of the best mentors in the space, two profitable traders on top of two individuals that invest in DeFi and actually have, you know, the rap sheet in the portfolio to show a rising equity curve. It's crazy that people would rather follow individuals on the internet that make up theories and speculate on shit instead of follow 7 to 6 figure mentors, 4 of them, who operate in a community successfully, helping rise people up and show people how to really actually prevail in these markets. So, you know, Kev, Aqua, floor is yours. That's all I have for the people today. Yeah, blessings to you guys.
Go ahead, Kev.
Dude, man, I ain't got much to share, but that SoFi bank that I was telling you guys about earlier.
You want to bring that to the stage?
Yeah, I'm about to bring it up right now. Let me see here. See my screen?
Yeah, but you're just resharing the stream. Kev's in StreamYard prison right now.
Hold on. I think they got out. All right, cool. See me now?
Yeah.
So I found out about this bank. One of my friends told me about it, and I haven't created anything yet, but I've been looking into it, and they offer cryptos, like 25 cryptos, all the big name cryptos, Bitcoin, Ethereum, Solana, ADA, etc. And they're also FDIC, so they're insured. Your money is insured to a degree, right? 250K.
Wait, you can have crypto at this bank right now, you're saying?
Yeah. The whole crypto, all that.
That's dope.
And what's the you said about something about earning yield?
Yeah, so they have fixed yields. They changed last time I looked at them. They were like 10%, 5 to 10%. But now they're kind of moderate, but you can still earn a good amount of yield on your stable coin, on your money.
Yeah, I mean the yield's down across the board right now in DeFi because of the market downturn, but that should change when everything goes back up.
Right. So,
but I mean, still the fact that it's people have been begging for, TradFi solutions that offer insurance on your crypto. And if this platform is FDIC insured, I mean, to the extent that FDIC insurance, if you guys have ever had to go through an FDIC insurance, situation, which I personally have, they don't tell you that, they can take as long as they want to pay you your money back. It works, but if they want to take a long ass time to pay your money back, it's still it's good to see that they do have insurance,
Right. No, absolutely.
Yeah.
So is this just an online bank then, SoFi?
Yeah.
Don't they got SoFi Stadium over here in LA?
Yeah, they do. Yes, they do. And they have they just, I believe they're pretty new. They're not a bank that's been around for a while, so they have pretty good referrals right now. If you get people on here, I'm looking for the FDIC.
I'm gonna be interested to see what financial institutions offer, like what TradFi institutions offer lending and borrowing for actual crypto in the future, like directly from your wallet.
Right.
You have, I don't know, what's a traditional American bank like Wells Fargo or something. I wouldn't be surprised if in the future, straight directly through your Wells Fargo application on your phone, you're going to be able to go and lend your stable coins or lend out your crypto or your Bitcoin directly in the Wells Fargo app and borrow against it.
Yeah.
That's without a doubt happening for sure.
Yeah, that's definitely going to happen. But, I definitely don't want Wells Fargo rates.
Good share, something definitely to put on our radar. But yeah, you guys enjoy your weekend. I'm going to hop off here. Blessings to you guys. Everybody watching, tuning in. Appreciate the love and the support. You guys, as always, be cognizant, be aware out there. We'll see you all in the next one.
Peace. Much love, everybody.